All right, guys, we're summarising the last 3 years of real estate since COVID. Definitely been odd. Where we've come from and where we're potentially going. Stay tuned.
I'm the ringleader, so listen up.
Good morning.
Ooh, how are you?
I'm good. And sorry if there's any background noise from my end. We've got a little bit of work going on downstairs.
We're getting a new studio being built, which is exciting. So the builders are in there ripping stuff apart. Stay tuned for the new studio. And you're in a makeshift studio today.
Yeah, you can't see it, but it looks like I'm in the rainforest behind me. But makeshift studio.
Awesome. Did you have a good day yesterday?
Yeah, really good. I did. I paid my respects early in the morning, and then got a little bit excited in the afternoon on Two Up.
Unbelievable. The nation was a lot. It seems like it's getting bigger and bigger every year. Two Up.
It's one heck of an event. Yeah,
Where'd you go?
Harbour Diggers, for anyone on the Northern Beaches, was the place to be. I bumped into so many familiar faces, and it's good spirit. That's the most important thing. Everyone's in good spirit.
It's a huge one. So, guys, everyone watching today, we just wanted to talk about, reflect on this property market in the last 3 years and use those metrics over the next 3 years to see if we can sort of work out what's happening. And I saw there was an ABC article yesterday that had a bit of a dig about real estate agents always quoting the market doubles every 10 years. When you consider inflation, it's not quite the case. But it's been a phenomenal amount of change in the property market in such a short period. It is so turbulent. The property market is responsible for employing a hell of a lot of Australians. A significant part of the Australian.
You're breaking up a little bit.
Population, when you consider all of the offshoots of building that come off property, where do you see the lines the last 3 years?
You're breaking up a tad there, but as you said, it's been one heck of a ride. And I think what's interesting is looking at the sort of the forecast. People coming into 2023 believing there would be more of a price correction, up to 7 to 10% across Sydney markets, which has not been the case. Which is on the ground has not actually been sort of the case for what people thought they would see. So that was the 2023 prediction, 7 to 10% across Sydney markets. For that to happen, so far this year it just hasn't. But for that to happen, we would need to see things do another 180, because at the moment, just no indication of it.
So it's look, I distinctly remember 2020, distinctly remember March, April, distinctly remember this has never happened in the world, and everything potentially was going to stop or was going to change. So COVID came along. We were worried about tenants not paying any rent, commercial tenants and residential. We were concerned about not having jobs because we can't work. And the property market came to a grinding halt. Transactionally, as agencies and our agency, volumes went down a lot. Prices held out well. So there wasn't. Everyone thought there was going to be a great property crash. And rather than a great property crash, it sort of leveled itself out. Would you be able to turn that speaker down, Billy, on your right-hand side so I don't get any reverb?
Yep.
Far right speaker's got a dial.
Yep, got it.
Thanks, mate. Okay.
Yeah.
So then, I don't like going back then. Everyone was like, "What's going to happen?" and property's going to crash. And it was quite an amazing stability that our government supplied, particularly in with everything, by throwing money at it. But the property market just leveled, and it leveled for maybe 3 months, 4 months. No one really wanted to trade. No one really wanted to buy. No one really wanted to sell. Everyone just wanted to suck it and see, what was going to happen. And then we were dealing with the mess internationally and nationally on what was happening medically. But an interesting thing that happened is it abstained. So when it did that, what I found is it actually ended up penting up that property market. So what it actually started doing was the volumes that did not happen in those 3 months period didn't disappear or delete. The volumes came that quarter or two after. So what was really interesting about our property market is, and what I've been watching even over last year, is when the volumes aren't done, when the sales aren't made in those suburbs and people just stay, it becomes a stored energy or a pent up demand. And then it'll happen afterwards. So we actually, straight after the GFC in 2020, in that year of pretty low volumes, in 2021, we saw those volumes explode as well as prices explode. So it really, really sort of built up. We've got a lot of capital growth. What do you remember about 21, Billy?
Well, I think the only thing that's been consistent really is just a lack of stock. That seems to be what's kind of underpinned everything.
Sorry, buddy, I can't hear you. Can you hear me? Yep. Can't hear you. So I don't know, guys. Give us a bit of feedback if you can still hear me talking. But I'll summed up 2020. 2021, we saw really good capital growth in the market, and everyone thought the property market was impenetrable. They thought, we're on. This is it. It's bananas. We saw as much as 20-30% growth in 1 year. Some parts of Sydney even went even more. And what was interesting in 2021 is regional Australia started doing really, really well. So your New South Wales, your Queensland, all those regional areas within those, it started becoming sort of cool to get out of Sydney. So if people started to get out of Sydney, so not only did the metro areas do really well, which was unexpected, COVID was still around, but then the regional areas started doing really, really well, which was 2021. Now, I think what actually happened was people didn't realise that sort of the volumes that weren't done in 2020 were then done in 2021, and they took that to be an even more positive sign for property. So people sort of jumped on the bandwagon a little bit, which then brings us into 2022 in our property market. And it looked like 30 years of being a real estate agent directly in the property market. I find this all really odd, hence our heading today, the odd property market rap, because from every single year has actually showed different colours or different stripes. It's been the weirdest thing. So then in 2022 was quite unusual, because I think what happened was two things. The government turned around and said, hey, Billy.
I'm going to just jump in here, guys, because our thing's completely dropped out.
So in 2022, we were given a left jab in the ribs by the Australian government, and with interest rates going up. And then in addition to that, I think people were a little bit spent with from the year before. So then they thought, then that really started eroding the market. So a lot of the capital growth that we benefited from in 2021, in 2022 we lost. So some markets we've lost by the end of that year. Some markets we lost as much as 20%. So it sort of went on this big rise, then went on this big decline, and then left us in January this year.
Can I loop this back to just a couple of current questions we're getting?
Yep.
And guys, just to let me know if there's a bit of feedback coming through. I might just actually move myself into.
Nah, perfect. Good on my end, but I'd love to hear what everyone's watching. Yeah.
Cool. The current questions we're getting, 5 most current questions in the marketplace. 1, what's happening with interest rates? Do you want to elaborate a little bit more? Or you want
Sorry, ask the question again.
Number 1 question we're getting at the moment. What's happening with interest rates?
The interest rates are leveling out by the looks of it. I don't think there's much more rising in interest rates ahead of us.
What's happening with the rental market? Why is it going bonkers?
Look, I think, and again, this is wrapping back to our topic today of the odd property market. Another thing that happened that was really, really odd was rentals in 2020 took a little bit of a hit, leveled in 21 and 22, and then towards the end of 22 in November started rapidly going up. So I think what's happened with that property market is a lot of with an environment or a climate with where rates are going up, builders are becoming more conservative, buyers are becoming more conservative, developers are becoming more conservative, stock is not getting built, and also the investor has found all of their costs escalating and no incentives being offered, like first home buyer incentives in the market to first home buyers, incentivizing them to come into the market. There's nothing incentivizing landlords to come into the market. More, if anything, it's de-incentivizing over the last 10 or 20 years. So the rental market's just exploded. We've seen probably about 20 to 30% growth in rents in 1 year.
It's I think the only way they're going to fix that as well is either more stock coming on, so more investors in the marketplace, which is, as you say, is just not happening. The motivation's not there.
Yep.
Or of course, rent's just sort of holding firm, but that is not. It's just not happening at the moment. That's the only way they're going to get their hands on it. And I think they've tried to fix it with introducing the legislation where rents can't be advertised by an agent as offers over, but I think it's not really stopped the actual problem itself. It's just trying to work around it.
And look, they've stopped landlords and landlords agents asking for more money with rents, which is another sort of cap for investors. I do have to say, the attraction for a mum and dad investor in the property market is not as shiny and attractive as it used to be over the last 10 or 20 years in this odd property market. But what I reckon we've got to be careful of is the institutional investors. There is a undercurrent where large funds are investing billions of dollars into building large-scale format buildings, very attractive for tenants. They can rent a 1-bedroom, a 2-bedroom, or a 3-bedroom, but it's going to stamp out those mum and dad investors with a surplus of stock. So I think if the government in this odd property market doesn't do something to support mum and dad investors to enter into the market and have a go, then I think the corporates are going to come in and have a go and take the lion's share of that rental pool of the market. Good for tenants, but not good for your mum and dad investors, because these mum and dad investors, it was it was pretty much their superannuation that they were building when they were buying an investment property and throwing it into the rental pool. That's a really hard thing to finance and do these days.
What do you think's gonna? Just last question. What do you think's gonna happen between now and the end of the year?
I think rates, there'll probably be one more rate rise just to remind everyone that to keep inflation in line and to behave with their spending, which people have started doing. I think a lot of stuff's hit the floor with unnecessary spending that's been cut, and I think the on the rental market, the rents are still going to continue to go up as much as 10 or 20% for the remainder of the year, which is scary. And I think for the sales market, there's probably a little bit of capital growth in there for people. People don't know it yet. They think it's a bunch of real estate agents talking up the market, but the reality is we're just reporting directly on what the market's doing. Yes, we are always positive. In a bad market, it's a good time to buy. In a good market, it's a good time to buy. But the reality is that prices are definitely on the up. And the reality is that this year, I think there's some good capital growth. I think it'll level out in the and be like 5% capital growth the year after, maybe 10% the year after that.
How's commercial going as well?
It's getting conservative. So there's a pressure on rates. So whenever people are buying a commercial property, they're relying on a yield, a triple net or net yield out of that property. That net yield got down as low as 3 to 4%, and people were happy to buy an investment property for $1 million commercial, and they were happy to get a 3 or 4% return, which was okay if you were paying 2% interest rates. But where the big issue now is, commercial investors are paying more than residential investors. Residential investor may pay 5 or 6%, whereas a commercial investor may have to pay 6 or 7%. Now, when you're paying those sort of rates and you're backing your price up on a 3%, 4% yield, no cigar, no deal. So then that's putting a pressure on the prices. And for anyone who doesn't know, often commercial property is indexed off the price of what it rents for. So as soon as you start messing with that percentage, you're messing with a lot of money. So if people are demanding a 6% yield and they were demanding a 3% yield, that's a big swing on price. That can be almost twice the difference in price of a property.
So it sounds like across the board, it's just a stock problem. People don't have motivations to do what they were doing before across the board.
No. Well, it's tied. It's all tied. Look, I know everyone's has different roads that lead to different results, but I think at the end of the day, I boil it all down to market sentiment. It's that underlying current in people's minds, and the market sentiment is probably a little bit better than what it was last year towards the end of the year.
Yeah, I definitely think that's starting to return. We did have a point in time, probably closer to November last year, the bottom of the market, where buyer sentiment was just nowhere to be found. There's no confidence, and people really just sort of pessimistic about everything: rates, prices, stock. It was all doom and gloom at one point. From the buyer's
Absolutely.
point of view. Yeah.
Okay, guys, hopefully that's a wrap for everyone on the odd property market that we've been seeing at the moment. It's definitely odd. It's definitely healthy. Like, I think considering the turbulence our country's gone through in 3 years, when you look at how prices have held up for property, it's been very, very good when you take a overall approach. But everyone feels like they've been thrown around like a rag doll.
It's all right, guys. It's going to be okay.
All right. Have a great day, everyone. Cheers. Thanks, Billy.
Thanks, mate. Cheers, mate.